Hello and welcome to Market Watch for the beginning of the week of the 27th of November 2017. Half week, and what I mean by that is at the end of the week, it is actually the start of December, so you do get some interesting going on. Administration first, be aware that you might see some window dressing on the 30th and you may see some slightly interesting trading. So just have that in your head because you may get some spikes and some movements off the back of it. Two things I really want to highlight this week. Firstly, it's going over in the States with their GDP and also Janet Yellen testifying. The second part of it is private capital expenditure for this country. You also get some Chinese data around their PMI and around their manufacturing, and you can see that it's been expanding quite nicely. Expect that to continue. I'm going to leave that. I want to highlight those other two pieces. So having a look at the US, the bright spot of the economy, the bright spot of the global economy, and the bright spot realistically for investment as well. If you are looking at the current thesis that most people point out on the macro sphere, growth is where you want to be, and the US is still without doubt the growth economy around there. Expectations are for GDP to expand by about 1.2 to 1.3% in 2018 and sort of finished 2017 around about 3.1. So third quarter GDP, it's preliminary read coming in this week. It's Thursday night for us here in Australia. You'll actually see possibly the ranges is between as low as 2.6 and as high as 3.2. But again, anything that's in that realm and in that sphere is a positive. And that should be seen as a positive for US investment and should be seen as a positive for the US dollar. The bring it back from an Australian-centric point of view, it should therefore give us a bit of a good lead on the equity side. Although we haven't been as tight as we normally are and our correlation to the US markets every morning isn't as strong as it once was, it's still there and it should give us a good lead. The reason I highlight Janet Yellen, she's testifying to the Senate and also to Congress. Normally she's pretty measured. Normally she tries to duck and weave as much as she possibly can around any form of sort of slightly curly questions about the currency, the economy. She'll be questioned all on that. But considering that she's now out completely, she's not going to stay on the board post her tenure as the chairperson. She's going to completely move away, let Jerome Powell have fresh air. She may be a little bit more candid, and that's certainly what the rumor is coming out of the US, that if she is asked a question around inflation, around growth, what the board has done, how the Fed has run the economy over her tenure, she's going to be pretty powerful and pretty much sort of, basically putting up and showing that her time and tenure as board has been very, very powerful indeed. So watch that. It could create some interesting volatility, and normally you don't get that with her testimony, but you just might this week. Then want to move to the private capital expenditure here in Australia. You really need to look at this, and the reason for that is one part of the releases that the RBA puts a lot of emphasis on. It is the future intention expending of private firms, and part of the thing that's going on at the moment and part of the bemoaning that came out of Philip Lowe last week was the fact that wage growth is so low, particularly in the private sector, and he almost blamed business for not seeing wage increases. Now, if you are looking at forward expenditure increasing, and it has over the last two releases to quite a nice level, levels that we haven't seen for a while, particularly in the non-mining space sector, which is therefore things like services, part of that growth should be in wages, because if you're expanding, it means that you should be growing your workforce to act and offer that service up. And that's what will be interesting. If you do see that to pick up again, it should therefore be a filter through into wages, and that hasn't happened. So watch it. I think it's going to be really important to actually look at this week, that private capital expenditure, because CapEx has been sort of fairly lackluster over the last 2 years, but it is showing signs of increasing. And that will be one point that I think the RBA will pick up, that if there is a bright spot, if there is any form of change going on in wages, it will be in private sector, and it will be over 2018 and 19. So that is the payout and probably the most important economic release for this week from an Australian-centric point of view.